Good morning, all. It's about 8:50 a.m. on October 7th, 2021. It's a Thursday. We just got jobless claims, and this afternoon we have a webinar. So very, very quickly, housekeeping items. We will be chit-chatting this afternoon at 5 p.m. about our flagship product, which we have never even felt we were going to be here one day, but we are. It's our NQ, and this is the equity curve for that. NQ opening range trading system, the one that works the first between 2 to 2.5 hours. The cutoff is about 12:15 Eastern. Okay, and then the second system, which is a post IB after 10:30, is still in development. That's a little bit more work to do. This is a little bit of that right there. This is a little bit of that. But to me, I'm really still not done enough due diligence to go there. Okay, but that will be at 5 p.m. Links are on TweetDeck. We put it there. If you look at our TweetDeck, you'll see there's a little write up there and a link there. Okay. I was put on about 6:50. I was up early. I haven't slept much. I'm not tired. It's exciting of what this is bringing to us. We've had tremendous response. Tremendous. Our problem is going to be how much room we have on the GoToMeeting system. Remember, you don't need a browser. I mean, I'm sorry, you need a browser, but working browser, either Chrome or Edge. Update it. Make sure your machine is updated. Your working speakers. Make sure speakers are working. Yeah, go there and play YouTube. So make sure you're hearing it, and of course, high-speed internet. Okay. If you're somewhere in boondocks, like we have a gentleman in Missoula, I don't know what to tell you on salad. I don't know what to tell you. My point: sell the property, move. Here's why. If you're making 50% yield a month before compounding, and you want to participate, you're in the wrong business. Yeah, you're doing the wrong thing. You're wrong location. Okay, let's go to Econ Calendar. This morning we had job cuts from Challenger, and I'm not really good at what the numbers should be, but I'm going to start looking at it a little bit more. Looks like we had a little bit higher than prior period, and this is it's a monthly report. Okay, monthly report. Okay, all right. The next item, which is more important than anything else, is our jobless claims. I think we dipped down the tab. Let's see, because I remember it right. With that negative, it was the initial claims dropped by 38, and so the small division, and we were below we were near the low end of the consensus range. All right. Tomorrow, non-farm payroll. Okay, the granddaddy of all at 8:30. The system is not going to trade at 8:30. We're on our own. Okay. When you try to put that in, it really confuses the system. That system is already 670 lines long. Okay. For example, here, our beloved CI, 9 lines. 1, 2, 3, 4, 5, 6, 9, 7, 8, 9. Boom. That's what it took to do this. This part, the 670 is huge. We have trimmed it down a little bit, but I'm sorry. This is 670. This has trimmed it down. It's a little bit less, but you could see the magnitude of what's involved. Okay. So it's not going to trade then, but we're going to be open an hour early. We're going to be an hour early. So if you want to trade that, come in. Consensus 475. Now, keep in mind, ADP came better than expected. Yeah, much better than expected. I think Peter Cook, which we have a privilege of working with him, he brought it up, and you saw that. The consensus was 428. This is a huge change. That's 160,000 more. If you divide that, that's almost 30-40% more. Where's that calculator? Yeah. So my good old HP 17. No, it's HP 10. HP 10. So it's 568 divided by 428. That's a 33%. That's a huge count, and this is mainly privates. So that's very, very good. All right. So that's what we're looking for. The number should be exceeded. Now, overnight, Moscow Mitch blinked, and we thought it's going to happen. We talked about it yesterday too. They don't. If they come to realize the Armageddon they're looking at, the $28 trillion, because the Fed can't help, is just way too big. It will have 9 million people unemployed first week. First week, yes, yes. So these idiots are playing Russian roulette with their own fate long term in terms of politics. And he could have that on his record. So he's done other stupid things, but this one would be big. So he blinked last moment. And I'm not a Biden fan. I'm not a Democrat. She's probably one of my least favorite Democrats out there. But but anything is better than Trump. That's criminal. He killed 700,000 people, whether he liked it or not. But that's what he did. I don't know what his intentions were. The point is, though, Biden did what the right thing was in this case. He turned on some CEOs on Moscow Mitch, and Moscow Mitch folded. All right. So I think the debt ceiling issue is behind us for now, but we've never solved it. We keep on kicking the can down the road, and that's what when you don't face your own realities, you're in a fantasy land. And one day, our great grandchildren have to pay for all of this, or maybe sooner. I don't know. I'm glad that I only have one kid called Admiral Tico, and he's got a little small trust fund, and he's happy. By the way, yesterday was his birthday. So today is the day my grandma passed away, back in '97. So October 6th and 7th are back to back important to me. Yeah, she raised me, so very hardworking, incredible, very Puritan upbringing by her and attitude and so forth. Bless her soul. Now I can't. Back then I couldn't talk to her about Maxwellian equations. But now I think if she hears me, she's turning her graves because I'm agnostic. So much for that. Let's move on. Let's go to PMT. That's what you guys are here for. Market timing. We did go long here. Good on a new trade. A new trade that's doing very well. We're gonna hold on to that. It looks like we're up another 41 handles from here. Hallelujah. Hallelujah. Why did I go there? Okay, well, let's go a little bit forward quickly and we come back. Here was one of them. Our true untested SP2 shined. Look at that. Look at the W. Look at the second leg higher. That was a key signal. Why we were going lower or sideways. The internals were telling us we're gonna go higher. So as the shorts came in to get aggressive, they got toasted. Okay, toasted. But first, let's go walk through that. We have a little W there on the CI itself. You see that? CI diff is positive. I'm worried about red trust, but it is what it is right now. Goal is to get to 50 bar, 4439 area. Now remember, these are all moving targets, so don't forget that. The Nasdaq is because of what's going on with Facebook and other social media mega caps. It's a little bit more under pressure. I'm going to see it in the trender. Okay, quickly. Now, remember, I just added some. Oh, no, this is good. Oh, sorry, this is a different login. I was going to say about data. Okay, utilities pull up. That's good. What's important that we did not give this up. The two key things for me were the 200-day on Trans and Russell. If you go to the trender, you see what I'm talking about. They pulled up. That was crucial. This is still there. Is this? Hold on. Yeah, I see. That's it. Yeah. Gotcha. Remember, this is the all-time high. Okay. Or at least last 7 years. What matters? So we pulled this up. We got 1, 2, 3, 4. So half of these trenders are negative. That's a 50-50. But looks like we're building up to go. Remember, earnings season is coming up. That's another thing. You add earnings season to what's going on, yeah, that wakes you up. So we're gonna stay long. SP1 Momo. This was a good signal too. This is kind of not very high yet. You can see it in perspective. It's not just, well, of course, you can't go there. This drop was, that 5 weeks drop, 38%. We haven't had that in, I don't know, since probably 29. So that's why you have such high readings there. But normally speaking, I believe 40 is where this number peaks. So it could have gone higher. For now, I think it's pulled back. Obviously, new highs are not going to be much. Remember what this was. Okay, when you get a reading like that, that's a signal And there's a time delay. Usually this peaks way before any problem. So we've had 5 tough weeks on the downside if you're long only. If you go back and forth like we do in the futures, then we're flexible. Okay. VIX pulled down below 0.6. We like that. Okay. Oh, by the way, that's a CL. Okay, hold on. Let me feel. By the way, this week will be our last week for CL. I'm consolidating certain things, products that are not having any acceptance, if you will. I'm dropping them. That's it. I just can't. We got to concentrate on the big issues. Okay. Yeah. Okay. Big move up around 80, pulled back on crude. Okay. Here's the problem with crude. It's not easy to adapt a system to it. Why? Even though it trends, too much geopolitical stuff in there, and it's a single commodity. This we like law of averages. S&P's got 500 names. Nasdaq is 100 names. These are big caps. Volatility is a lot lower. It's a 10, 15 area. You enter crude, it's really anybody's guess. I'm not into that. Yeah. Too old for gambling. SQ is down. SQ is a risk, tail risk for the big boys trading the options on SPX, not SPY, SPX. We don't trade options on SPX in our PMT Pro. Why? It's really not for our crowd. Okay, that's for the very, very big firms. You know, big funds and pension funds and so forth, and hedge funds. They go there because it's more efficient for them. But the ticket price is so high. But you pay $1.80, $2.50 for let's say SPY options. Here you're talking about times 10 at least. So you get $25. Average person can't put a contract for $25. That's $2,500 per one contract in outlay. People are not going to do that. So what this tells us is that they took some of their bets off. So this signal was not bad, but look how what the delay is. Even this signal at the near the two sigma event on the SQ, most likely that's what set this up. If you look at it, most likely that combo there. Now remember the design limit, and there's a little write-up, the little box on PMT that says it's 100 to 150. Well, the lowest has gotten is 111, and the highest was 170, 170.55. So we blown the design system. I wasn't involved with the design. I was brought in right after that for testing as a practitioner, and that was in 2010, I believe. 2000? No, I think it was 2010. I don't think it was 2009. And 2008, nobody was doing anything. It was just Chicago was to survive. This is a CBOE product. There's a white paper on PMT page. You can look at it. It's also there on the archive, so it's open. You can go to a link on the website that gives you a chance to just look at archives, which is 4 weeks behind this one. 4 weeks behind. Okay. We have some little cleanup to do, some duplicates. I was not active on PMT. By the way, most likely next year is the final year for PMT. If Time and Digest doesn't come back, because we have no way of ranking ourselves, and I can't against others. There's 120 market timers. Okay, it's what do you call it? There's a desktop. Hold on, let me see. Hold on. Where's my? Okay. Oh, there we go. Okay. See, there's 120 people here. All right. I don't know what these other guys done. I don't need to keep track of everybody, but these are the most logical people who are going to be in the same space with me. But I don't know where they are. This is the last issue that came out, which was, I believe, well, it dragged us through the year end, but this came out inauguration day, so January 20th. I think 702, issue 702. So without that, I have a hard time trying to. People ask questions, you got to answer them. You can't ignore them. But how's your ranking? I don't know what my ranking is. All I know is that recently I haven't done too good. That's for sure. Why? A lot of back and forth. A lot of back and forth. Here's where we are on that. So, yeah, there we go. You see this? Yeah. Versus that. That's not good. But it is what it is. Now, in the meantime, I was a little bit busy. I was a little bit sidetracked on something much, much bigger, which you're going to hear about tonight. Let's go on to TD. Okay. This is for Time and Digest. Actually, this was really my main chart for Time and Digest. One thing was the term structure of the VIX. Okay, because you can see the expression on the various expressions on the wicks. Yeah, hold on. Yeah, no. Oh no, no, I don't. I mean to. Hold on. Let me go down. Okay, there we go. You can see the term structure there. Obviously, the F should be down below here. It's just the way it's sourced, but you can see 20, 22, 23. That's normal, where you have a rising vol, not zero. If you get a spike, that's end of the reversal. I mean, the reversal is coming. When you get inverted VIX, that is, front month gets really expensive. That's because the stress is too high. What do I mean by that? Right here, this. I liquidated 4 sigma, and went actually slightly above that. Remember, look at these. Look at these. This is above it. It's overran. Look at this. Naturally occurring events are best modeled by sigma channels. Don't forget that. It's a superset of Bollinger Bands. All right. So we talked about SP2 a little bit earlier. The stochastics are coming up a little bit slow, but they're coming up. There'll be a rendezvous point up here. We'll let you know next week sometime. I'm going to try to do at least one of these a week. Okay. And then 3.27. That's a negative on spread. The spread should be just to double check here, guys. We're long October. October hasn't expired. We just got into October. So expiration is going to be here. Next week is expiration, so probably it's going to run out somewhere in here. I think on the 12th, 12 or 13. If not, it would be 19 and 20. So we're going to be still long October. 3 months later is January. Short that. That differential we're plotting and overlay that with sigma channel itself. That's a little bit trickier because you're not doing a price in. You're putting an indicator with the overlay of sigma channels, what we did a long time ago. One thing we learned, when it gets very, very negative, we're near the top. When it gets to a bottom, we get near to zero. And of course, there's a slight, in my opinion, these days, offset we have to deal with. So, but the same rules apply if you go back and look at it. You'll see what these are. These lows are put in. These are elevated. Right now, we're pushed down. So most likely, we're going to continue to go up here. Okay. Treasuries. How about $1 trillion coins, platinum coin, for $1 trillion? By the way, if the mint prints it, then it's a legal tender, right? Really? Why are you printing only 20, making 28 of them? You got the die, make 100. Let's have positive. Let's have no debts. Yes, yeah, sure. Yeah, if that happens, your gasoline would be 25 bucks a gallon. A carton of milk would be at least 35. Go figure that one out. Yeah, exactly. So, hi Joe, welcome. We do these 2 or 3 times a month. We're trying to do it once a week now, as we get more situated here on the desk. But I'll have a new picture of the desk later on, but not now. Not today. No, next week. Hi Jeff, how are you? Welcome, sir. Okay, we were talking about treasuries. Okay, the front end is picking up a little bit. Understand that. I want to see what's happening with cars. This is a financing for cars. This is for mortgages, and this is pension funds. They're edging up. That's healthy. That's healthy a little bit. Okay, just don't want to go too fast. This was alarming. What are these levels? These are monthly support and resistance level, measuring what happened last month to project what's crucial here. You're often going to see that. Those is going to go to those levels. Look at goes to those levels and keep testing it. Look where it stopped. Now sometimes it overshoots, but it corrects itself. So don't worry about overshoots. Say, oh, don't poo-poo it. It's not good. No. It'll come back. It'll come back to that level and settle there. So I think if the number tomorrow is good for non-farm, the market, not just market, will rally further because we are oversold, but also the yields will go up a little bit, and it's all good sign. The problem we have more than anything else, from what I read, and it's no different than what you guys did, other than a few exceptional reports here and there from investment banks, is really as you know, nothing new, is supply chain, and part of it is the layoffs in the country of the source of supply chains. So not just or states here in the U.S. because it's such an integrated economy, we're all impacting each other, and so just look at and then now truck drivers. Look at LA. There are 75 ships all the way out to 40 miles out in Port of LA. Okay, Long Beach. It's massive. Part of it is they don't have enough trucks to move them out. Go figure. Okay, now what else I need to show you? Oh, one more thing. Let me go here. Let's go here. And let's look at this. Let's see what we got here on this one. Now, I had not looked at this at all this morning or even yesterday. Well, 125. Okay, that's good. Hold on. Oh, shoot. I didn't mean to do that. Sorry. Go away. There we go. Okay, so separation is getting bigger. Okay, I've always said that, guys. Look at this. This stuff will tell you. That stuff will tell you. The separation is getting bigger. So we better hurry. We keep on dropping in number of stocks. The percent of the stocks out of 500 names, the biggest and the best horses out there, if you will, by market cap. They're above 200-day moving average. We keep on dropping it, okay? This is not good. That's what happens with the earnings season, okay? So that's that. That completes our PMT. Let's go to overnight. Here's my overnight. Let me bring my overnight here. What time is it? 9:10. Okay, we're gonna wrap it up quickly. Yeah. Here's the change we're in. About 1% again. Look about 1% a day as a target. Up or down. That's as the initial feel about how the opening the range is gonna shape up. We're up 0.8. The high was 98. So that's another 8 handles. 42, yeah. 44. When I opened this meeting, it was at 41. So it ticked down a little bit. Aside from that, do you guys have any questions for me? Let me bring the question part out so I can see that. Any questions for me, guys? Again, 5 o'clock today. And again, we're going to be talking about this baby. Okay? Now, this is not the most latest, but it's close enough. There's a little bit of work we did on this area. We cleaned that up a little bit so that it doesn't occur in the future. But it's very robust. You can see the number of trades. This is 6 months. So it's done quite a bit. It trades once a day. What we added was one trade, hold on. One trade either way per day, no more. Okay. So if you go to here, you can trade. Let's see. This is an older copy. Okay, it doesn't matter. Well, what happens is that you won't get. There's a time to get initialized. Here's a window it's going to start. The finish is at 12:15, so we'll not go past that. So time in the market is 2.5 hours, from 9:45 to 1:15. We seem to optimize that time frame for this kind of a range expansion trade, and takes 2 out at target, first profit target, and then moves it BE to moves it trading stop to BE and has a runner to go. Okay, that's what we're going to talk about tonight. We're not going to talk about this yet. That's another, I'd say a week, maybe longer to get there, and then we'll have a webinar on that. But let's capitalize on what this thing is doing. You saw how well it was yesterday. Again, this is not the latest copy. I have copies here. I can check. Yeah, we have copies here that are more current when we get for tonight. Get ready for tonight. Okay, guys. Anything else? By the way, that's a rendition of B-21 over Edwards Air Force Base. Any questions? Okay, let's close this, and we're going to post-process this for you guys, and then get you guys in the other room, and good luck trading today. Thank you.